All right, good morning, everyone. We are live, and as usual, Joe is back to his old self, and I don't know where he is. He's late, but we have Jack from Jack's Business Talk here. So, good morning, Jack.
Good morning. Thank you for having me on.
No, yeah, so hopefully Joe jumps on because this topic was a little bit more for him from the lending side of things, but the topic was also kind of Jack's idea. So maybe Jack wanted a little more understanding of what may happen if Fannie and Freddie were privatized and whatnot. But let's catch up with Jack. It's been a while. What you been up working on, man, right now?
Well, I finished up the apartment of the eviction unit. I haven't shot the final video of it yet, but yeah, I just have to clear out a dolly and a couple other small pieces, and I'm going to shoot the video. It's already been listed, but yeah, it's going well. My next big project is to tackle a roof.
Cool, man. How's the weather been so far? So if anyone see Flavio, Josh, and Jason tuning in, thanks guys. Joe is running a little late right now, but we're just catching up with Jack and what's he doing in the Pittsburgh market. I know he's trying to pick up some side hustles or figure out maybe like what career direction he's going, right?
Yeah, so that's the other thing I've been working on too i- i- is do I want to do go get my CDL and do truck driving? I've been studying up on that, or do I want to get my real estate license and work more on that aspect and do more handyman? You're smirking down there. You have something to say.
No, we just have him, tuning in like his normal self. So Joel is here. So good
What's up,
morning,
guys?
Joel.
Good
Back to your
morning.
old self, I see. But thanks for because this topic is mainly for you, I guess, in
I
a
know,
way.
right? I
So
know,
we
I
needed
know.
you to tune in. But
Yeah, my
thanks for joining
channels
us, man.
weren't connecting properly. I've been trying to mess with this for a few minutes here. I don't know what's going on.
Yeah, so I know Instagram is having issues. You're not able to stream on Instagram right now.
Yeah, well, I took that off
I'm
and
not
blah
sure
blah blah.
why they had that little warning symbol thing saying that they're having issues with Instagram. But yeah, Jack has just kind of been catching everyone up what he's working on, side hustles he's trying to come up with. But what have you been up to, Joe?
Yeah, man, I've just been working nonstop, working on the business and building things back up. And as I said many times, this has been a unique couple of years in our industry. Um, but just working, man. That's about it.
Cool. So everyone, just a reminder, Joel's YouTube channel, he has two of them. He has his Strive for 25 podcast channel and his Lending for Entrepreneurs channel. So go subscribe to those, and got Jack's Business Talks channel. So go check that out and subscribe, please. But Joe, did you get a chance to kind of think about the topic that maybe Jack wanted to touch on and whatnot?
Yeah, I did, and I think it's such an interesting topic to dig into because as I was looking up some stuff, there was a few things along that path of Fannie and Freddie, getting under government sponsorship. Some things that happened back in 2012 that I had no idea about. But yeah, I'm looking forward to digging in.
Yeah, so Jack, maybe is there anything that's specific that you kind of want to bring up to Joe or your thoughts on this? And like I said, we're going to be talking about kind of the lending side of things. And, I know Trump has been mentioning that Fannie and Freddie should be privatized and whatnot. So, Jack, was this something that you've been thinking about this why in your investing journey right
Yeah,
now?
so yeah, so I guess like for me, my question is I'm not familiar with like when Fannie and Freddie were created. Was there a time that it was privatized and then it got government backed and they're talking about just throwing it back to the public, or was it always a government thing?
Yeah, I mean, I think Fannie was built first in like the 30s. Freddie was built in like the 50s or 60s later to be able to have more competition rather than just being one market for this. And then obviously the collapse of 09, 08, 09. They didn't have the capital, all the assets and bonds that they were holding on portfolio on balance sheet deteriorated in value. So they didn't have the capital. So, I mean, you literally would have had the entire housing market, implode. So Fed injected 200 billion, and again, I only know this because I just looked it up. Injected $200 billion of capital into Fannie and Freddie, and then basically took it under their own conservatorship. So they because again, like these are public companies that have shareholders. So they would have gone belly up. All the shareholders would have lost all their investment. The government comes in and they inject capital, take it over, and then there were some agreements that were made. Where the government would take the profits. Actually, I take that back. The government was going to be earning 10% of return on their money. And at the time, from 2009 to 2012, the Fannie Freddie revenues didn't have enough money in revenue to be able to pay back the 10% each year. So they were borrowing money to be able to pay back the full 10%. And so then in 2012, this is kind of what I was alluding to before. In 2012, there was an amendment to the agreements, and they basically changed it to where just all the profits that Fannie and Freddie earn will go towards the government to pay back the dollars. And so as of 2012, 2013, as all that stuff was happening, Fannie and Freddie then started making profits. And so as we fast forward the clock to today, all the profit that Fannie and Freddie have made has gone to the government. And so I think I remember seeing, so the government injected $200 billion in capital, and I think Fannie and Freddie together have paid back $300 billion total. And so right now, Fannie and Freddie, if they want to go public, they can't because they have no capital that they've been able to, keep under their own umbrella. So I'm going to stop there.
Jack, does that kind of help you get a better understanding of the situation and maybe lead to your next question, or what else Joel can help you with as far as how you're thinking of navigating the situation if it was to be privatized?
Yes, Joe did a good job at explaining that. And like I said, I was just I wasn't sure if it was ever public and it went private, because right in that time frame that Joe was talking about, was at the same time as I was graduating high school, so I wasn't really paying a whole lot of attention to everything that's going on. And with different things that are going on in my life, I really couldn't focus on all that kind of stuff. But so what was it like when it was privatized? Was like the interest rates compared to before and after? Did they really see any difference, or after it got stabilized, or?
Yeah, rates didn't really change much. Doing some research on this, because one of the things that popped up in research was, okay, if Fannie and Freddie right now go public, right? They have to go. They go public, do an IPO, raise capital. How much could they actually generate in capital coming in? And I saw different estimates from 50 million, 50 billion, I think, 25 billion, 50 billion. The number that they keep saying that they need to raise to be able to make this happen is $200 billion to be able to make it, to have the capital reserves. So if they went public today, could they raise enough capital to make it happen? All signs pointing to no. And then along the way in my research, there was talks of, well, if they do go public and privatized, that could have an impact to increased rates. And all things being equal, maybe it was fractional, maybe 0.25%, 0.5%, something like that. And from my research, it basically was saying, hey, right now it's government backed, so everyone has full 100% faith that it's not going to go belly up. So you're going to have stronger demand for these mortgage-backed securities in the secondary market. Whereas if it's public privatized, you don't have the full backing of the government, so there's a little bit less confidence, and so maybe there's a premium built into that. But who knows exactly how much, but 1/4 to 1/2 is what I saw.
Yeah, because they have to get their returns too, right? So like you're saying, if there's less stability or kind of concerns out there for them to get their returns, that's why their rates are going to have to probably be slightly higher. I guess the way I'm kind of looking at it, or trying to figure out if it does happen or how I would navigate is you look back at 2008, there was just a lot of maybe bad actors in a sense, where there was just a lot of like they said, ninja loans and products out there. So there wasn't as much, I would say, maybe regulation, if that's the right word. So if it does privatize, you're probably going to get a lot more people in the market or competition, or companies coming out figuring they can provide something to this market, and you're going to have more, I guess, in a way, predators in a sense. So it could be a harmful situation for people that aren't maybe knowledgeable in the sense of what they're doing, in a sense, as far as purchasing a property or going through the mortgage process and whatnot. So I think from that sense, it like Joe was talking about, just a lot of uncertainty, but it's also going to allow for possibly a lot of the same similarities of 2008, where you're going to have products that are out there that could be deemed predatory in some extent, right? If you don't know that the rate is going to readjust in 2 years, right? And you're entering at a very low rate, and then all of a sudden 2 years later it changes, right? If you're someone new to investing or to real estate, you may not be familiar with that, right? So I just think that it's going to allow some opportunities in a sense. So especially if you are investing already, you're going to have some ways to navigate that. But I'm looking at it more from, do I want to be more liquid and try to do more cash purchases, right? And from that stance, because if I'm a seller and someone offers me cash now, then I know, to me that offer is going to stand out even more to some extent. So that's what I'm trying to figure out as far as how I'm going to navigate things. Jack, any more questions for Joe? Like, what else do you got on that?
Not so much on the Fannie and Freddie topic, but something else I was wondering. So, like on the backside, when you're looking at mortgages and evaluating someone, what is it that you as a lender is looking at?
So the number one thing is that when we run a file through our automated underwriting system, AUS, the number one thing is it's either going to give us an electronic approval or it's not, right? So the system is set up with a blueprint that it's looking for to get somebody approved. And then there's also exceptions to that rule. If you don't get the electronic approval, there's what's called a manual underwrite that you can do on certain loans, like an FHA or VA loan. They're going to look at compensating factors. But a couple of rules of thumb when it comes to, say, conventional loan, you want your front end ratio, which is your mortgage payment is divided by your monthly housing payment, right? So if your mortgage payment's $1,000 and your gross income is $4,000, your front end ratio is going to be 25%. Your rule of thumb is you want that to be under 45%. Your back end ratio, all of your payments, you're capped at 50%. FHA is going to be more flexible. You can go up to 56.9% on the back end ratio. And VA is even more flexible. That's a whole different story. So there's these parameters that we as a lender are going to be looking at. And so then you have all these other gray areas and exceptions and work history and commissions and income and, late payments and different things like that. So there's a lot of gray area that comes in it, but those are just like a couple of the basics.
Just want to say what's up to Joe V tuning in. Big Val looks like he's tuning in from either Jack or Joe's channel if they paired it. But good morning, Val. But yeah, I think so. Joe, what are you seeing out there on your side of things as far as the lending side? Is things picking up for you, or?
This is what's so interesting is that, and this is a deal that I saw in Florida where it came to me. They were under contract, and the other lender couldn't get them approved. I was able to get them approved. However, there was something that popped up that pushed us out of approval, and that seller is now 3 months under contract. I've only had the file for a few weeks. That seller is still wanting to work with that buyer to get them to the finish line. Whereas a year or two ago, that seller would have taken their lumps, put it back on the market, and got a different buyer. Now you're seeing, I think, more desperate sellers in certain markets. Whereas, buyers are, the demand's not there. So it's unique that I haven't seen in a while.
Sorry, I lost Jack's questions for Joel. What else did you want to touch on, Jack?
I guess another question is like for someone who's looking to try and become like the perfect applicant to come across your table, or the big things to do?
So without having any background or knowing what the situation is, there's two things, and I've put a couple posts out there about this. That if you're looking to be able to acquire a rental property, the first question is how much money do you have available? Because once you have that amount, then you can back into a certain purchase price. Because you're talking, if you're doing a conventional loan, the standard is 20% down. You can do 15% down as well, except the rates are going to be higher. There's going to be PMI. So rule of thumb, 20% down. So let's say you got 50K that you want to work with. Let's say you allot a certain dollar amount of say 10K to closing costs. So really you got 40K to work with. So back out that money for down payment. So you're looking at, what is that, 200K times 20%, get you to your 40K. So rule number one is how much money do you have? If you know that number, then you can back into a price range that you can qualify for. And then two, the credit scores are going to be so important. You want to be over 720, 740 to really make sure that you're getting the best financing package, because you have to understand from a rate and risk standpoint, on a primary residence, you're going to be getting a certain level of pricing. On an investment property, you're going to be having a risk-adjusted price is going to be higher. So rates are going to be higher, 0.5%, 0.75% higher than a primary residence. And so I always tell this to buyers that conventional loans, let's say you're talking about a primary residence buyer, conventional loans are more credit score sensitive, whether it comes to rate adjustments and DTI and all that. Whereas FHA is going to be less credit score sensitive and less sensitive to upticks on rate and qualifying. So then if you're talking about an investment property, it's going to be even more stringent on guidelines.
Joe Steven, who's a new member in school who's looking at investing in Pittsburgh, asked, Joe, do you work with foreign investors? I'm from Canada looking for a DSCR loan.
Yeah, there are going to be products out there for that specifically. Yep. We call it a foreign national. Now, there are some other...
Do you work with foreign investors?
I do, personally, yeah.
Okay, well,
yep.
There you go.
Sweet.
Well,
let's do it.
So on that topic, since Stephen brought up DSCR, I did have someone I was talking with yesterday, and they are trying to understand and wrap their head around why is DSCR loans so much more expensive from like the fee standpoint, when doing a DSCR type of loan.
Hey, Mark, my audio just cut out. I'm sorry.
Why
DSCR? What
is more expensive to, I guess,
compared to what? A primary residence or a regular,
or even like a regular investment loan? Using your personal income statements and your tax return. Yeah. So why is a DSCR loan usually you're paying all these higher origination fees?
Okay, so that's a great point, because when you're comparing two loan options, right, you could say, hey, at the same level of costs, this is the difference in rate, right? So let's say you've got a 7.75 DSCR loan with 2 points. You've got a 7.25 conventional loan that's a rental property. It's a 7.25 with 2 points. So you could compare it on rate. Okay, same cost structure, difference in rate. Or you could say, okay, well, my conventional loan's at 7.25 with 2 points. Can I get to a DSCR loan at 7.25 and maybe it costs 3 points? Well, there are caps on what you can charge. So there's a difference in cost. And again, that was a random example, may not be accurate, but there are different secondary markets, right? Your Fannie and Freddie conventional loans is going to a much bigger pool of secondary markets that are going to acquire these loans. Whereas DSCR loans, for example, is more of like a commercial loan. It's going to a different secondary market. A lot of that money is coming from institutions like Goldman Sachs, B of A, that kind of thing. So it's a different secondary market. So that's the biggest thing. And then, I think the number one thing that anybody that's going to be doing a DSCR loan needs to be aware of right now, and that's the prepayment penalty. Because on a conventional loan, there's no prepayment penalty. You could refinance, pay it off whenever you want. Now, the lender that originates it may have a penalty, because if that loan gets paid off in 6 months, they have a penalty they're going to incur internally, but not to the buyer. Now, on a DSCR loan, you have a sliding scale of prepayment. So let's say that you have a DSCR loan that's got a 3-year prepayment penalty versus a DSCR loan that's got a 0 prepayment penalty. So the zero prepay is going to have a higher interest rate than a 3-year prepay. And that 3-year prepay means that, hey, if you pay off the loan within 3 years, you're going to have, let's say, a 3% prepayment penalty that's added back into your payoff when you close the loan. So either you sell it or you refinance. And so you're going to have a lower rate on that prepay loan. And again, you have a sliding scale, 3-year, 2-year, 1 year, et cetera. So it's a different secondary market. And I've seen a DSCR loan be very comparable to a conventional rental property before. It happens. So these things fluctuate all the time. So it's important to be able to compare, and also multiple options, right? Because you have different lenders that do different things. So, I'm a big proponent, especially if you're a real estate investor, you want to be talking to a couple different lenders to be able to really compare how they do things and price things out.
So I want to say what's up. Good morning to Rad tuning in. So Rad, I also want to remind you to please tune in from my channel also, but you're coming in from someone else's channel that you're paired on, which is cool too. But you're either coming in from Jack or Joel's channel, but thanks for stopping by. He is a new member in school. Also, he is in Florida, but he bought his first property in Pittsburgh. So he used some of his Bitcoin proceeds and purchased something all cash. So that's pretty cool. But back to kind of Steven asking about the DSCR. So Joel, you're talking about prepayment penalties, and it's a fairly new thing. So I think I don't think it's that black and white yet. I think there's some gray area to it. But because Steven is looking at investing in Pennsylvania, and you were talking about prepayment penalties, but for Pennsylvania, there's kind of this, you're not.
$250K.
Yeah. So can you maybe touch on that about the prepayment for Pennsylvania?
Yeah. So in the state of Pennsylvania, and I think there may be a few other ones where there's some state regulations that prevent a prepayment penalty on loans that are smaller than $250K. So what that means is that, hey, I'm a lender, I can't even show you a prepayment penalty option under $250K. So these are what the options would be with your 0 prepay. Rates are going to be higher. And actually, not that long ago, I had a comparison where we priced out the 0 prepay on DSCR, compared it to a conventional loan. And in this scenario, the rates were quite a bit lower. I think like 0.5% actually on the regular conventional loan, all things being equal. But at the same time, when you talk about DSCR, it's a different secondary market. So there are limits, right? Minimum loan limits. So some investors, some lenders have different loan limits. So one may be 150K at a certain investor. A different investor may be at 125K as a minimum loan limit, or 100K. 100K is the typical minimum loan amount for DSCR. Now, I do have a contact that I broker some deals out to that can go down to 65K, but it's very, very few and far between.
Yeah. So I guess also for Steven, I'm not sure if Joe touched on it that much, but for the prepayment, typically, if it's not going to have a prepayment, the rate might be slightly higher, because there's more risk for the lender for you paying it off quicker and whatnot. So typically, if you are able to get one with a prepayment penalty, the rate will be slightly lower from that standpoint. Nuclear war, thank you for stopping by. You see you're having fun in the chat section. But yeah, I mean, he's not country boy. Well, I don't know, Joe. Country boy is asking, do y'all think ICE getting the job done? Do you want to touch on that a little bit now, or? I know we got some California people in the chat. Is you folks staying safe? Is it as bad as the news is making it appear? I mean, is it media driven, or if you guys have any insights from California, maybe you can chime in the chat.
Well, one of the things that I saw was that I think Gavin Newsom had like 1 or 2 posts over like a 30-day period on X, and then within a 2-day period recently, for whatever reason, he had posted like 40 times in a couple-day period. So I don't know why he would do that or what's going on, but I don't know if you want to call it defensive or damage control, but yeah, I'll leave it at that.
Oh, Rusty says far from LA here. Yeah, so hopefully stay safe, man. I mean, I know it's far, but Jack, I know you probably have no thoughts on it, right? Or you have a thought on it, or
I my thoughts are kind of very minimal. My only real thing is simply just that it's not the first time the National Guard's been called in to deal with something of this nature. So I don't know why this time is being so driven to such an extreme on the media. I mean, I know it's news and stuff, but I'm not sure why we're painting good guys and bad guys over what is just ultimately a situation that's occurring.
well, yeah. I mean, I think like you're saying, I like to Country Boy's point. He's kind of, or this person is asking, they're only seeing videos or maybe what the media is showing, right? So but you're hearing some people say it's not, there's nothing going on there. And then you hear
Peaceful protests.
yeah, so it's just you can get caught up in this, the media is being the media, and it's better for us to be confused. That's what they want, right? They want you distracted and whatnot. But I to me it's kind of it just falls into that path of them just you know having more control and keeping you distracted and not focusing on yourself and being able to do what you can do, and you can get so riled up about this. And I think they definitely focus on people's emotions and get people emotionally involved and whatnot. And I am surprised that there's a lot of people I see posting things where like you know that that it's the whole thing is are you an illegal immigrant? Are you an immigrant and whatnot? And people are getting upset. Are you not saying illegal? And so and then people complaining about you're waving your country's flag and you're spitting on the U.S. flag, but you don't want to go back to where you're the flag you're waving, and it's just a whole chaos and mess. And but just and I hope people just try to focus on what they can focus on and do better and put their situations ahead and whatnot. But and I think that's why hopefully this type of content, like lending side and what you can do better, because I think definitely ultimately whatever happens, there's going to be a lot of opportunities out there, right? I think that's the biggest thing. And I think I don't know what are you guys seeing, like are you guys is Joe, a lot of people coming to you bringing to you deals that you're just like, oh man, this is a great deal right now?
Yeah, I mean, I just had a realtor come to me with I think it was like a 30-pack deal in Collinsville, Illinois, and a buddy of mine is in that area, and it's like, okay, here's an off-market deal. Here you go. See if the numbers work. And then the seller that's okay. We're doing a seller carry in the back end. So, that's just one example. But yeah, I mean, the big stuff, I think people maybe at a time in their life where they want to be able to just get their cash and move on. And so I'm seeing the people that want to grow and scale. There are some packages that are out there to acquire that are, talking about commercial lending.
Frank says he's barely legal. Good old Frank. Yeah. Yeah, it's definitely a tough situation. It is a tricky situation. But yeah, they're just, they want us to be at odds, right? They want people to be confused and emotionally involved in the situation. But for you, Jack, I mean, are you still looking right now? I mean, I know your W-2 side, you're more focused on kind of getting that resolved, seems like, right? Like the job situation, the future of that, the side hustle side and whatnot. Yeah.
I think what the big thing for me is I'm just trying to finish up some projects, and I'm just kind of curious about what's going on necessarily in the whole mortgage industry right now with everything that's being said, or is this just more noise from the current administration trying to make it seem like there's more going on than there is? I mean, I'm not sure. Kind of like what we're talking about with the whole thing in California. We're only being told what we're being told through the media and stuff, and how much is actually being told, how real is it, and how serious is the whole thing going to be?
Yeah. Big Val says he'll protect Frank. He'll hide out with you. Yeah. Good morning, Kenny. Kenny, thanks for stopping by. Rusty says need more info on making creative financing deals. So do you think, Joe, do you think in the kind of environment that we're in now, do you see a lot of people going down that creative finance path right now, like trying to figure out how to make deals work and figure out opportunities out there or whatnot?
I definitely do. You still have this gap between, people who are selling that have this 2021 vibe of what they want to get for their properties. And then so that's one of the reasons why you're seeing properties that are sitting on the market longer. And you got buyers that are seeing the complete opposite. They want to be able to find a deal. You got higher rates, higher prices. It's hard to make a deal pencil. So what I'm seeing is the way to be able to merge those two together to find middle ground, to have a buyer and seller get on the same page. You got a seller that wants to be able to get a certain price. You got a buyer that wants to be able to get into a deal to pencil the numbers. And so if that seller wants a certain price, what I've seen is a seller carry on the back end. So you agree to a certain price, you get your financing terms. And so let's say that the financing terms, and this is a mobile home park deal that I was working on that didn't close, unfortunately, but $1.9 million. The commercial lender, we wanted them to put down 30%. The seller was willing to do a substantial seller carry of 20%. So the buyer was getting into the deal with 10% net. The lender was going to provide the 70%, and the seller was going to carry 20% on the back end. So you get your first mortgage, it closes, you record it, that deed of trust is on the property with the county, and then that second deed of trust gets completed with the seller and the buyer on the back end. And a lot of times it happens with a separate escrow. It's a different title company potentially, or separate escrow chain. And then that second is typically like a 2 or 3 year balloon. You agree on some type of terms like a 20-year AM or interest only and things like that. And then, if it's a 3-year balloon, then that buyer's got 3 years to be able to improve the property, generate more revenue, increase the NOI, get a better valuation to be able to then refinance or sell, and to be able to combine both pieces of financing.
Yeah, I'm taking some shots right now in the chat section. Frank said I'd give him up in a second. That's why he said he appreciates Val for hiding out with him, but he said I'd give him up in a second. I told him half a second I'd give up Frank. Then of course Joel brings up my bald head being the bat signal for the cops. Country boy says, bro in the middle, so cool. He can sell water to a fish after catching it. Talking about you, Joel. Well, country boy, I'll put in his own channels also in the chat. So if you haven't, you can also go subscribe to Joe and Jack's channels on YouTube also.
Would definitely appreciate it.
Let's see, Rolando.
I'm almost at 100 subscribers, Mark.
On your new channel? Cool.
Yeah, my brand new one, yeah.
While I'm looking for your channels to throw in the chat, Curtis is asking, can you do 5% owner occupy and have seller carry? That might beat the 50-40-10 from Velocity Mortgage strategy.
I've not personally seen it happen in my ventures, but I'm sure it can get done if you have the right, group of vendors, title, realtor, seller.
Hold on, I'm putting you guys' channels in there. Why do you think basketball Americans? Oh, come on, man. Hold on. I'm trying to find Jack's channel. Jack, ask Joe a question while I'm looking for your channel.
Jack, I got a question for you. So you mentioned full-time job and then also a side hustle. I don't have all your background, but I'm curious to hear more about the different things you have going on with your day job stuff. What do you do?
So currently, I'm a machine operator for a pharmaceutical company, and we assemble the syringes that get filled with dye that will inject you before your MRI or CT scan, and that's why I do it for my W-2. I'm getting back into doing some handyman type of work and all that kind of stuff. And as far as the rental property business, I do, I buy long-term rentals and I do value add projects.
Cool.
Yeah, so this year, the projects I have left is I have, well, I just finished the one unit. I've been calling it the eviction unit because just went through an eviction. But I literally just finished it. I haven't filmed the video for it yet. But that one's I just finished. My next project is getting a roof put on another place. And I have 3 concrete slabs I need to pour this year.
So this is the question. This is how I ask this question to certain people, not to get into their personal business too much. But the question I ask is, okay, let's say you take your main job and then your side hustle. What percentage of your day job income is your side hustle stuff generating? Is it 10%, 20%? How would you quantify that as a percentage?
Oh, it's just starting out, so it'd be like 10 or less.
Cool.
Flavio's making trouble in the chat. He says this stream is not for him and Frank. But Curtis says challenge accepted, Joel. I guess, and Jack, I'm not sure how much creative finance stuff you're looking to try and do, but I guess for me, I feel like I know for some, it is an option for a lot of people, and it's some ways to get in or for them to get their first deal. And that's sometimes that's their only option, right? So I feel like, I get that side of it, but I'm not sure how much I would be in the sub 2 space and that type of creative finance. I lean more towards, if I'm going to do anything like that, the seller finance or the 50/40/10 is more what I'd be looking for. The sub 2 just feels like there's just so much that could go wrong for it, and that's just my take on it.
Plus, also where me and Mark invest with the prices of the housing and stuff, I'm not sure how much seller financing you're going to get from like the residential side either.
Yeah, it's going to be tough on a residential side,
Well,
unless
so
you're dealing with an
that's
investor.
yeah. Well, that's my other take on it. Is kind of, if you're gonna get a seller finance deal, a lot of times you're gonna have deferred maintenance possibly, or there's gonna be, I don't know if issues is the right word, but you're taking on someone's property in a sense that they're willing to get rid of, or it's time for them to get rid of, in a sense. So, and I don't know if it's the right way of putting it, is taking on someone's headaches, but I see that as where you have to figure out, where you're at in your journey, and is it just about acquiring deals with that seller finance so that you can get the asset and at some point rehab it and get it up to where, value add to where you can reap the benefits. But I feel like it's kind of like that person is willing to do this because they don't want to deal with the maintenance, or they don't want to deal with what they have to do to bring this property back, right? So I feel like that's the dilemma with like seller finance. Yes, there's deals out there, and I've seen a few, and it's, for me, it's kind of like, do I want to, this property doesn't quite maybe fit what I'm looking for, but the entry point is great. So it's kind of like, where do you draw the line, right? You can get a good entry point on it, but as far as maybe the property itself, maybe it's a little further out than you'd like, or the area is not exactly ideally where you're investing in a sense. So that's where I'm coming at, where it's kind of like, usually if you find these seller finance deals, there's something associated with it, right? That you're going to have to decide if it's worth taking that on.
To add on to that, there's 2 profiles, and again, I don't do a lot of it, but I see it from afar. And the 2 profiles that I see a lot of are the people who have no money, just want to get into the game, right? That person that's like, I just need to get in the game and figure it out, take that risk. Then you have the other side of it where it's like, you've got somebody that's got experience, they've got the cash reserves, and you go get into a property, put the money down, do the seller carry back, keep your cash. And let's say you want to do a renovation on the property, use your cash for the renovation, increase the value, and then come back and then redo financing to get rid of the second. So, I mean, you have two different profiles that, I see typically, maybe there is in between, but again, that's just not what I see. But
someone likes your hat, Jack, in the chat. Joe said we need. Oh, bringing up shirt. Joe V said we need a "Let's Save Frank" T-shirt. But while we're on that topic, then I'll just show the other shirt that old guy REI is selling right now. He is selling the ORAT shirt, which he's raising money to donate to the Blind Center where the ORAT event is at. So go check it out. The PayPal link is in the chat. So go help out Frank get rid of the inventory that he has so we can donate the money to the Blind Center. So Harrison says, yeah, agreed. Mark, Ohio Realtor, said sub 2 is a minefield and banks are going after all the folks who did it during the pandemic. So that is one issue, right? Curtis says instead of sub 2, do a lease option. That is, that's the one thing, right? There is a lot of ways to get creative in real estate. It's just a matter of how you want to approach it, right? In a sense, and lease option has its own kind of pitfalls to it too, right?
I have a question for you, Mark. You've been an ORAT for over a year, maybe longer, 2 years. Who's the GOAT of the community? Who came from nothing, learned, and just like took the information and implemented and just crushed it?
Definitely not Joe V, because he hasn't done shit. He just comes and makes trouble. No, but the GOAT.
I mean, besides Zuber himself.
You mean like from when he implemented school, or just ORAT from Zuber's original, from when he has started his channel, I guess?
I mean, I guess all of the above, whichever one you want to choose to identify.
I mean, if I
behind?
had to say, I mean, I would probably say like Millennial Mike, if you're gonna talk about from like the original, when Zuber started his channel. So like I think that's how he connected with Millennial Mike. Millennial Mike was already trying to build like or share his journey on his YouTube side, and that's when Zuber kind of started at the same time. So Zuber saw this young guy trying to get on house. I think got his first property. That's how they connected, and from there they kind of, I think their journey has kind of followed each other, their path together along the whole building their brand and whatnot. And Millennial Mike is killing it right now. So I think if I had to go all the way back that far, I would probably say like Millennial Mike. And I would say probably Zuber looks at Millennial Mike as kind of like his own kid or little brother, or that's how I would look at it.
Yeah.
But
Does he have a day job?
He's a SWAT officer. So
That's right.
he got promoted. So he's a little bit been busy on the social. He's been a little inactive on the social media side. He has a baby on the way. So I definitely feel like he's kind of just taking. He's kind of focusing on some other things right now. But as far, I mean, I guess other than that, I think Frank probably definitely embody Frank and Jack. Probably definitely embody the community and what Zuber's trying to promote. Definitely, kind of that small and mighty, always, helping everyone. It doesn't always have to be bigger is better, especially like Frank's journey. Frank has had his struggles, got back in it, willing to help, so even like his Zoom calls on Wednesdays have all been, it was before school even started, right? So that was kind of where the whole accountability groups all started. So I definitely feel like Frank is kind of that, exactly what is, even though it says OG for old guy, it's definitely the OG of kind of the community. And Jack is always, Jack is the one that's trying to figure out a way to do like an East Coast type of meetup instead of just a Vegas meetup. And he's trying to blend all of that. And Jack is always asking a lot of great questions in the school community. Like I'm just in there fucking around and making trouble, but Jack is actually asking questions to try to get people to think, and thoughtful questions and whatnot. So yeah, definitely like Jack and Frank are definitely two, and of course Jen. She's in the chat, but Jen is like the behind the scenes kind of heartbeat of the community. She's always looking for guests to come on Zuber's channel and whatnot.
Speaking of GOAT, have you guys seen this talk about Michael Beasley taking down LeBron one-on-one back when he was with the Miami Heat? Because Beasley and Lance Stevenson did a one-on-one and made like $100,000 and raised money or something like that. And Beasley is a legend when it comes to one-on-one. The stories go on, but there's talk that we lost Mark. There's talk that Michael Beasley, he was like a 12-point a game average guy, just a meager guy, but like top 2 or 3 pick overall.
Yeah,
but would dominate LeBron one-on-one. And people that talk about LeBron not being the GOAT reference this story a lot. That
well, yeah, I mean, I think there's so that's a Michael Beasley is awesome. Like if it was just basketball and you're just playing a pickup game and you're talking about a guy that's I think he was like 6'10", he could he was like Kevin Durant in a sense, but a lefty, probably even more physical, could play inside, outside. But as you say, right, basketball it's not one-on-one, it's a 5-on-5 game, right? So I think there's a lot of guys out there that have come through that are great basketball players, but whether they can play as a team or whatnot, and definitely that's part of it. And even like Jordan's time, I mean, there was a lot of guys supposedly that were probably just as good from an athletic standpoint, but playing in as a team and whatnot, that takes a whole different element, right? So I'm not surprised. Michael Beasley was kind of a freakish guy, but a lot of his I think it was mental stuff after, right? It was like kind of a depression and whatnot, and he kind of got, I don't know if blackballed was the right word, but he kind of got kicked out of the league and whatnot. Hey, since we do have some Cali people in here, I always forget, but do you guys know that there's a SoCal ORAT group that has a Zoom call? So Owe Nicholas, who's in California, who also invests in Pittsburgh and in Pennsylvania areas, but I saw him post on school, on his Facebook or whatever or Instagram that they had like a SoCal Zoom calls and whatnot. So I don't know, just letting you guys know there's like a SoCal group, ORAT group going on. Let's see.
There's a lot of good comments in here.
Yeah, so Jovi also mentions Jared. Yeah, REI Jared is very up, because if you look at the school community, he's like by far kicking everyone's ass in the amount of comments or what is it, replies or whatever. He's like by far, way and above everyone else. But Jared is doing a lot of cool stuff. So he does rent by the room in Arizona. He lives in Oregon, but he's killing it on the pad split model. Yeah, you're gonna have to kidnap people, Jen, to go to California. Everyone's going in a different direction. Everyone's getting out of there. If KC tunes in, he's gonna be like, he's out already.
Well, look, I like Josh's comment. Zuber raised the whole community, not an individual GOAT. Just rising tides lift all boats. Kind of a mentality. It sounds like.
Yeah, but I think if you encompass everything about kind of Zuber's message, I think Millennial Mike definitely checks off a lot of those boxes, right? He Millennial Mike got the house hack. He started the social media press, started the YouTube channel, shared his journey. Then he started getting into more, finding private lenders to work with, finding his market, becoming like the face of that market. Sorry, I got this cough going on. But yeah, so I think if you look at probably what Zuber represents, I think Millennial Mike probably checks off all the boxes there.
But I guess technically though, he was already going. Sort of. Already doing it.
Yeah, I mean, he was already going, but he definitely wasn't, their journeys really started together on the YouTube side. They kind of started at the same time. Um,
Well,
yeah, but
Flavio
yeah,
says Mark is the one. The one.
Flavio just says that because Flavio has direct access to me, so he's like messaging me all day and just sending me memes and making trouble, and then I have to help him how to figure out. He doesn't, he's trying to figure out how do I figure out what time this is or something. So Flavio just likes that he has direct access to me, and half the time I'm like, Flavio, are you killing me, man? But Flavio's a good guy.
Jason's comment, the good of flipping is how I first read it. Then I did a double take. Oh, flopping. Okay, talking about LeBron. Gotcha.
Oh yeah, yeah. So Jason's in Chicago, so I'm sure he's definitely a Jordan rules
Yeah.
guy. Yep. Rusty says so many resources, strategies, networking opportunities, and ORAT. So like Rusty, for example, he brought Big Val over from a different community. So Rusty and Big Val were in a different, I think it was school. That's how they connected. And then Rusty was like, "Hey Val, you got to come check out this school side. Like, there's a lot going on here. There's a great community." And then Big Val checked it out, and Big Val, oh yeah, this is my people. Like, this is where I feel comfortable. And so Val loves it here. But yeah, so they were in another community, and then Rusty kind of, hey man, you got to come check out this other one. So but yeah, it's a good place. So we're still waiting for you, Joel, to join. But
Well,
yeah.
I got to share something that I'm working on. So can you
Oh,
see this wristband?
another thing? What the
Can you see this
shit?
wristband?
I gotta share something else for you now.
No, it's all in the same lane. It says one stream away,
Ah,
one income stream away. So I'm not sure exactly on the date. Maybe it'll be July 1, maybe sooner. But it's all about, hey, building an income stream, putting together 30 days, building the habit of working every single day, even if it's for 2 minutes, working on that task or that goal. So that's something I'll be kind of working on launching soon. And that's part of the reason why I talk about income streams so much, because if you increase income, save money, then you can invest.
all right. Hold on. Before we move on that, I need clarification then. So Rusty and Rusty, Val told me that you brought him to the ORAT committee, but Rusty looks like he's saying Val brought me over. So I don't know who's telling the truth. So I need clarification on that. But both of you are cool dudes, so glad both of you joined. But back to Joe's what he's working. So what is that going to be though? That's going to be
It's
school
just gonna
year?
it's gonna be a 4-week sprint, one webinar each week on a Monday or a Tuesday, and it's just gonna be keeping it top of mind. Programming your subconscious to be able to reach your goal, put the habits in, and it's just gonna be it'll be $25. You get $25
Oh,
to get
you
into it.
lost Flavio. You just lost Flavio.
25 bucks
Flavio
to
said
get
sign me in, Joe, and then you said $25, and Flavio's out now probably.
$25. We'll ship you the wristband, and if you complete the challenge, which is doing one thing or 2 minutes every single day, and we'll track it, then you're going to get a gold wristband, a gold one.
Oh, Flavio, texting me doesn't count as doing something every day. Yeah, okay, so yeah, send us the webinar information and whatnot. But I think we may have lost Flavio at $25. But if not,
Well,
can,
I'm sure
can,
he'll just text you to send $25 his way to send
well,
his way. Right?
okay. Well, another question will be: can Flavio access from his flip phone?
Of course,
Okay,
of
just
course.
making sure.
You can do the audio, no big deal.
Okay. Harrison says, yeah, Val and Rusty are definitely great adds to the family. Yeah, Rusty says, yeah, thanks, Harrison. So yeah, so wait. How is this then? Pay $25 to join your webinar, and then you got to pay $20 to join school.
That's fair. If you promote it on your channels, it's a great trade.
Well, you know what? If you give me whatever information I need, I'll promote it. I don't have
Yeah,
any
you will.
problem there.
You would do that regardless. That's how good of a human you are. You are a badass. Because
So
someone
once
said you
again,
are the goat. You're the goat in making. The goat in
Once
making.
again, here's Frank's PayPal link. I don't even know if Frank has the PayPal link, but here's Frank's PayPal link for the ORAT shirt if anyone hasn't bought it yet. And I don't worry, there's only one version of it. So Flavio thought he got the girls version, but um, don't worry, there's only a unisex version. Um, but yeah, we definitely got off topic, but I'm
Oh,
definitely excited for this year, next year. I think there's going to be a lot of opportunities out there. I think, but I think you touched on it, and hopefully Steven is still here. The biggest thing is, I think I even told Steven to talk to different lenders, right? You got to talk to a lot of bunch of lenders, and
Joe,
and
stop it.
just well, yeah, yes. I mean, definitely you work with people that you can trust, and is going to go out of their way to help, because there's some lenders out there that would just send you like a rate sheet, right? Like, oh yeah, this, right? But there's guys like Joel and other people that you can probably have a conversation with and get a better idea, right? Like, and then they can help you navigate through these situations, right? Oh, Frank, if you're still here, Steven is asking, do you ship to Canada for the shirt? I got you another one, Frank. But Flavio said he's saving up for his next house. Rusty and Katie are awesome. Yes. Yes. Um,
I do want to throw something out there because inflation's coming down, it's low. There's talk of the Fed lowering rates, and if the Fed lowers rates significantly, let's just say over a period of months they lower the Fed funds rate by a full percent. Well, what's going to happen? You're going to have anybody that was on the fence of whatever they're going to do, whether it be buy a business, buy a rental, buy this. They're all going to be off the fence, getting into the game. It's going to be crazy. That's how I see it, and I don't see how rates aren't lower in 2026. So I'm curious, hearing Zuber continuing to talk about what was he? What's the verbiage he shows of the doomers, and the
hmm?
market's crashing. What's his take on rates, markets, dip, grow?
Yeah, he doesn't. His take is that he's been calling it for a while, and he's sticking by it that there's not going to be any rate cuts this year. That's his take on it. I definitely feel as so that's also why I'm so big on people just getting started, because you have to get in and there's so much other things to learn and get in, even after getting your price. It's a lot of, like, so one of my friends who just bought something in Pittsburgh, like, he was like, oh yeah, like, you learn so much just even dealing with the appraisal, dealing with the inspection, trying to figure out that type of stuff, or even you even don't even the property management agreement that you might get with the company you're going to work with after. Then you start realizing there's these other associated fees that come up possibly, or how they do their renewals. And then there's just so much different things that you're learning in the process. So it's like, to me, that's why I feel like getting that base hit first, getting started and getting your foot in the door, and then now you have other levers to play with after. But you really got to get started before you can really start navigating, because if not, everything is just kind of what someone is telling you or what you're reading in a book, and you're not really absorbing a lot of things. So I really think getting that first base hit is super important. um Okay. Before we, yeah, hold on real quick. Yeah, so Zuber's not expecting rate cuts this year. He definitely sees 2026 is going to have a lot of opportunities out there. So those that are getting prepared, those that are doing the work, are going to have tons of opportunities to make some moves next year. So I think that's one way to look at it. But someone does. So there's a couple questions for you, Joel. Harrison's asking, do you do sub 100K loans?
I do. Yeah, I broke them out, but I do.
Okay. Jason is asking, what is included in this besides, I think he's saying bracelet. Like, what is the webinar going to be about? Can you tell us more about it?
Yeah, I mean, the basic premise is it's going to be a framework of talking about the overall goal, the plan, generating more income. Everybody's going to have their own lane that they're going to be doing to generate more income. It could be a second job, it could be a side hustle, it could be editing videos, it could be whatever, copywriting, whatever it is. The goal is to help somebody navigate, identify what they want to be able to do. And then the biggest premise is talking about harnessing the power of the subconscious, reviewing your why, a couple action items every single day, tracking that and tracking the activities. And so at the end of the day, you're going to be tracking your own activities every day, and it's just going to be accountability. It's $25, right? If you had a coaching program for a month, you may pay $500, $800 for coaching. This is just going to be a 30-day sprint, weekly information, accountability, people just collaborating a little bit and just talking about income streams and tracking habits. So it's going to be about an hour, and I'll be some various strategies and mindsets and just basic things. It may not fit for everybody, but the goal is to be able to have some accountability, to be able to put the work in every single day. Because you have the typical mindset of, hey, I'm going to work 5 days and then take 2 days off. If you want to build a new habit or a new lifestyle, the common research talks about doing something every single day, and if you miss a day or two, you got to start back over. So that's the basic premise.
So Joe, I give you shit about being late, but Max, thanks for stopping by. This is, I'm glad to see you're here, but Max is usually late to his own accountability call that he runs. But hold on, yeah. So give me more information later on when you get it for your webinar.
Cool.
We can share that and get people some bracelets and get them doing something daily, like Jack. I don't know. It doesn't pop up on my feed as much now. Are you still doing the kind of daily videos, the short lives?
Yeah, I do them. I try to do them Monday, Wednesday, Friday on the days I don't have other videos going up. Yeah, I don't know, but maybe you'll have a different opinion. But like, I just kind of felt like a broken record sometimes, where I'm just kind of saying the same thing over and over again. So I took away the Tuesdays and Thursdays because there's other videos going up those days anyway.
Yeah, that's kind of why I almost really just got away from doing videos like myself. That's why I just do more lives, because it's just way more interactive and I don't really have to come up with the topic. That's your guys' requirement. Anyone is welcome to come on and do a live as long as you come up with the topic. Then I'm all for it. I'll do it. But
oh damn, Jack! I didn't realize I didn't subscribe to your channel yet. I just subscribed.
What a dickhead, man!
Seriously, yeah? What a Jack!
Jesus Christ! No, but yeah. So Jack, you're doing some cool stuff. Thursday. So my other question is, how come you don't post the Western PA call as part of the school, like in the calendar?
I've reached out a couple times. It'll pop up like once or twice. I'm not sure what's going on.
Did you tell him it's every week? Because I don't know if that's because if he can just set it and forget it, that might be good, right? I think was that what it was?
I think what I need to do is, I don't think I said in the last message series that it's the same link.
Okay. Jen said, Joel sounds awesome. She's looking for a side hustle, especially after getting inspired by Jack's post. See, like I said, Jack in the school community does post a lot of great posts, get people thinking and commenting and whatnot. I'm just there to put my 2 cents on everyone's posts. but Jack actually comes up with thoughtful things for people to think about and what they're trying to do right now. So Jack, do you want to maybe refresh people that may not be in school, or maybe people that are thinking about joining school, what kind of content they can get from there? But what did you post in school that got Jen inspired?
So I posted something, and like Mark said, I post stuff just to get people thinking or trying to shift their different direction of thinking. But the post that you guys are referring to is, I commented saying, "Hey, or what are you guys doing as far as your main job? What are you doing as a side hustle on the side, trying to get money to go into more rental properties in a quicker state?" And everyone's commenting and talking about that. There was the post prior to that where just different things that happen in life, I'll sometimes post and talk about. There was someone at work, I didn't really know him so much. I knew his wife outside of work, and we would sometimes hang out sometimes. But she reached out to me to tell me that her husband passed away. and because he didn't call off on his last day of work, that the company I work for is not giving him his last paycheck and all this stuff. So I posted a comment about the thing about that being like, you still on the fence about doing real estate because your W-2 doesn't care about you. There he has job posted. He wasn't in the first day of the viewing, wasn't even posted. So that's another comment I did. I just try to get people to think in different ways and challenge themselves.
Sorry, I was replying to someone's text. Let's see. Yes, Jen says she's thinking about selling bras, like the Frugal Gay. So Frugal Gay talked about that at the Zubers event. What are
Really?
you laughing at, Joe? No, yeah. So that was
I love him. He's hilarious. He's a good dude.
yeah. But she says, but Jen said it's kind of awkward to get her 7-year-old involved. Let's see. Joe V is asking for Joe's class. Can we use a side hustle we have started already?
Absolutely. That's the whole point of this is just to increase income, whether it's existing or a brand new thing. To Jen's question about building something new, yeah, the whole point is just to be able to take it to the next level because people are going to be in different stages of their journey of their income streams. So it's just, hey, what can you do in the group to be able to take it to the next level? And then what I'll do is I was in the middle of a mini series called 100 Streams of Increasing Income, 100 Stories of Increasing Income. I got, I'm on a pause right now just because of life and job and family. But I'll post a link because there's 8 stories that we put up there. So just to give you an example of some things that people are doing out there.
See, Harrison knows croc picks make big money. Yep.
Yes.
Yeah, croc. I didn't. Yeah, not cockpick. I said croc picks make big money. But Flavio's telling you, Jack, send a text on WhatsApp when you go live, because a lot of times Flavio's flip phone doesn't notify him, I think. So for the notification purposes, Joe V, have Mark text me the info, Joe. Yeah. Just give me the information and I'll share it or whatever.
Yeah, I'll get that to you later this week. I do have something to share for a second. Sorry.
No, go ahead, man.
Well, speaking of February 2026, the next ORAT in Vegas, I've promised that I would go before and I've fallen through, but I've got some bad news, man. My back is so messed. I have arthritis in my lower back, my SI joint. And something happened. I was playing basketball, hyperextended. I've been out of commission for a couple weeks now. So I've just been doing a bunch of rehab type of activities. So getting my back, my core, my glutes into good shape. So that way, whoever comes to ORAT will see me strike out the financial firefighter.
Oh, so you are. So well, first I want to say is, how can you hurt yourself playing basketball when you play in slow motion?
I mean,
so if anyone
the slower you
doesn't
go,
know,
the harder you fall.
Joe didn't even know, but he shared himself playing basketball on like Instagram. I guess he hit the wrong button and he had this reel of him playing basketball.
It was a story, I think.
Or yeah, and I was like, why are you showing yourself in slow motion playing basketball? But anyways, how the hell you can get? You barely got off the ground when I saw you, and how did you hurt yourself?
I mean, when you're old, and you know how it is. You're pushing 65, so I'm sure you're aware. When you're well, the thing about it is like I was playing with some 20-year-olds and like we were hooping and I was moving and I just jumped wrong and then I fell. I didn't actually fall, but I landed weird on my leg and hyperextended something. So red light therapy.
That's your first problem, playing with 20-year-olds.
I mean, but you gotta do things to keep you young,
Yeah, Joe V said I'm like 3 feet tall, so Flavio's gonna update his phone soon, he said. All right, cool. Harrison is saying, Joel, red light therapy is great for those injuries.
Well, how do I go do that? I don't know how to make that happen. I'll have to research it and figure it out. Does anybody? Oh, I do have a membership to Lifetime.
Peptides. Get into peptides.
Okay, peptides. Someone was just telling me about that literally this morning. They gave me a brand name. I got to check it out. Anybody a sauna person. I've heard a lot of good things about sauna. I never really done much of it before. Anybody have any feedback on saunas? What the whole thing is there?
No. I mean, you mean so I know a lot of people like to do the cold and hot. So they do the cold plunge, then they jump in the sauna,
Okay.
right? So a certain amount. Seems to be dying down a little bit, that fad, but that's what a lot of people were doing. I know peptides is really big right now. A lot of people are doing the peptide treatments and whatnot. Um, KC, what's up, man? So he's one of those exiting or exodus of California. He's moving to Vegas. We're going to test out Vegas, but he says he just played basketball yesterday after 20 years. His knees are hurting. Yeah. Rusty says my chiropractor has read. This has turned into like a senior chat right now. So Frank, you can tune back in and chime in. But this is turning into like aches and pains and rehab story. But it actually is very important. So you know, if anyone like Zuber's on this health kick right now, and he's looking great. He actually wore a tank top the other day on his whatever
Yeah.
his stream. Yeah, but
Show some
he's doing a
skin.
lot of but I think on that topic, it's kind of people try to find balance early in their life, and they're trying to find all this work-life balance and whatnot. And I get it. And even the health sometimes, I think definitely if you look at it, if you just focus, really, really hard and grind for a few years, then you can do all these other things. Like you look at like Zuber, even like Sean Cannell, I see him posting a lot of fitness stuff now. So then health becomes more relevant again. Right now you're focusing on that. You have all this time to focus on all these other things that are very important to you, right? So I think is that work-life balance, especially when you're younger, it does kind of maybe hold you back a little bit in a sense.
Younger like me, unlike you, right?
No, you're old as dirt too, man.
True. Well, no. Speaking of the fitness part, right? Getting into shape, all that stuff is important. But me, massive ADHD. Like I have to do way many more things internally, process wise, to be able to just do basic living functions, right? Because I'm a creative. I go do things. I'm a salesperson. I go do things, and the logistics part of the job or life are mundane. That it's hard to do those things sometimes. And the working out part of it, for me, I try to do it almost every single day. Is so important for people with ADHD in terms of clearing out the stress and the cortisol and all that stuff. So that's not only physical but from a mental standpoint too is so important.
What about you, Jack? I forget, how old are you again?
35.
Oh, you're still young, man. Aches and pains for you? Anything?
I have trouble with my hands.
I don't know where to go with that.
I don't know. They sometimes get locked closed.
I'm waiting for the PORN jokes in the comments.
Yeah. Is that something you've always dealt with, though?
It just started about a year ago. It was funny. I went to the doctor, and they're like, "Well, squeeze my hands as hard as you can." I was like, I'm gonna hurt you." No, you're not gonna hurt me. Just squeeze my hands. I was like, I will hurt you. You do not want me to squeeze your hands as hard as I can. And they're like, no, you can't hurt me. I deal with a lot of tough people. I squeezed them, and yeah, they started screaming because I hurt them.
So wait, but so it's not pain then? Is it pain for you though?
The joints start to pop, then my hands get locked in that position, and I can't get my hands open again.
Mm, well, I don't know. Is that like a condition? Is that like a real? I mean, is there a condition for
I don't know.
that? See, I was trying to stay away from it, but of course, Jason comes in saying, "Stop touching the pee so much." But Casey is saying just go swimming. I think he's talking about you, Joel.
Oh,
As I'm giving you guys, yeah, it's all right if you got about, but we're gonna wrap it up soon. But as me giving you guys shit about being, I'm the one here sitting waiting for a shoulder surgery, so it's like, do I have a next real estate play you're looking at? Yeah, I do. I think there's a lot of opportunities in Pittsburgh right now, so just there's a lot of great deals, just monitoring a lot of stuff and just kind of throwing lowball offers out there. There's probably a lot more opportunities I could take advantage of. There's a lot of guys in Pittsburgh reaching out and asking me about private money and all that kind of stuff, and I'm just I don't want to deal with that. I don't know. I just don't want to partner with people. That's just my thing. I don't.
Yeah.
Plus I don't think my personality fits well with a lot of people from that standpoint, from investing side. So I think a lot of people would get turned off by my maybe lackadaisical or less attention to detail as some others. I think from that standpoint, I don't mesh well probably with investing, as a partnership with a lot of people. But that's just knowing yourself, right? Um, Troy says sauna is great for vascularity, muscle recovery and repair, but also for brain function support. 45 minutes. Yep. Yeah, I forget. Yeah, I forget how old Troy is. Okay, we'll wrap it up. I can't see, even Joe V doesn't want to touch that subject. Jack, he says I can't make any jokes, not appropriate. But if you are in pain, yes, get it checked, Jack. I mean, just hopefully it gets better. I mean, did they give you any treatment though? Like, did they actually give you like some kind of option?
They can't figure it out. And
Is
the thing is, it
something in
doesn't
your
hurt.
family,
It just
maybe? Has anyone else
what's that?
dealt with it? Has anyone else in your family dealt with something like that?
No.
No.
The thing is, it doesn't really necessarily hurt. It's just they get locked up, and then you're trying to work. You're trying to pick up bags of barrels and stuff at work, and makes it kind of hard. You feel like you're working with two stumps.
Oh, yeah. Troy says he's 46, so he's I mean, he's right around our age. Flavio, we'll wrap it up with this one. Flavio says, Joe, in your seminar, people like me, no skills at all. Tell me, Flavio is a sleeper. Flavio, I know, is not telling us the full story on things, but Flavio says no skills at all. Is it fit? Is it a fit for him? Okay.
100%. Now, when you say sleeper, are you mean like a literal sleeper, like he likes to sleep a lot, or like he's going to surprise us, kind of a sleeper?
Flavio is one of those guys that I know I'm going to meet at ORAT, and he's going to roll up in a private jet and he's going to have like this huge portfolio, and I'm going to be like, see, I knew it. You tell me you have a flip phone and shit and you can't speak English or whatever, but I know he's a sleeper.
Mark, is your shoulder going to be in good shape enough for next February for our battle? On the mound.
Wait, what? You're pitching to me, right?
Yeah. But you still got to be able to have enough strength to be able to swing. You're right-handed, aren't you?
Yeah, I don't know. I'll be all right. I could bunt if not.
Oh, Jesus. Maybe we need a T-shirt. We need a T-shirt for that. We need a T-shirt.
I should be fine. I should be fine by then. I mean, I should be fine by the end of this year, but it's really how long I want to milk it. Yeah, but I don't know. We'll see. We'll see how much longer I want to do this fire stuff. But I don't know. Anything else you want to say, Jack, before we wrap things up? Hopefully you got some subscribers out of this. Apparently Joe didn't subscribe, so I know you got one subscriber out of this.
Yeah, real time.
Anyone else? Go check out Jack and Joe's channel. Joe has a new one, so some of you may not know of his new one. But go subscribe. Like I said, I'll get more information from Joe on his webinar.
Jack, I'm waiting for you to subscribe. I'm still at 97 subscribers, waiting for you.
Oh, Jack, you got to subscribe to Joe's new channel.
I'll give you 24 hours.
Anything you want to say, Jack?
No, I'm good. Thanks again for having me on. I really appreciate it.
All right. Keep posting your great stuff in school so that you can inspire others and get people thinking. And and then Joel, like I said, man, just keep doing what you're doing. Send me your webinar information and see you in school soon, man.
Yeah. Deal.
And then everyone else, thanks for tuning in. I know we got a little off topic at the end, but that's kind of how it goes. But thanks for tuning in. Hopefully Joel was able to help you guys with some lending, and like I said, sounds like Steven's going to reach out to you, and
Sweet.
hopefully if you guys got questions, go reach out to Joel, and I'll see you folks. I'll actually be back tomorrow with Jeremy Taggart from
Ooh,
Pittsburgh.
that's a good one. He's a stud.
But yeah,